what I'm really focused on is what's going on at the Fed, right? And challenges to Fed independence. We got the employment report coming out on Friday. We know that we are currently going without a head of the Bureau of Labor Statistics, and so we'll see what that report looks like. We haven't seen President Trump's nominee confirmed just yet. And so there's questions right now about data integrity. I don't think there's anything nefarious going on, but I think there's certainly, we've seen response rates fall with these job numbers over the last several years, and other surveys, other types of economic surveys as well. So it's nothing new, but I think it's going to make our job a little bit trickier. And so we're looking at a variety of data to get a good read on the economy. And so this all is going to set us up for FOMC meeting, which is next week, which we are highly anticipating. We do expect the Fed to cut. And it'll also be this, once a quarter, we get the new summary of economic projections. And so we'll get the latest read on where those within the Fed expect policy rates to end the year for this year and next year and the following year, which isn't quite as helpful, but it'll be helpful for this the end of 25, the end of 26. And then we'll get their reads on their on the forecast for where the unemployment rate is going, where inflation is going. For us, we are still, something we talked about earlier, is that we see confirmation across a number of data sets that suggest the labor market is not as strong as it was. A good example is today we got the job openings and labor turnover survey, JOLTS data. It showed that there's less than one job opening available for every unemployed worker. And that's the lowest in several years. And you can rewind the clock a few years when the job market was quite a bit healthier, there were 2 job openings for every unemployed worker. So things have changed very, very quickly. So we know things are weak there, but we also know inflation is not yet defeated. And so, the Fed is in a pickle here. And just because they're expected to cut rates in September doesn't mean that we're going to get that additional cuts beyond September are guaranteed. And so we expect this debate over the future of monetary policy and pressure from within the administration to continue. And this is really important because it does inform inflation expectations. It could move the stock market. It could move the dollar and obviously long-term bond yields. And so I think this has broad implications for where things are going. And so that's why we're focused on it. And we don't want to see anyone mess with Fed independence. And so we along with everyone else, we're on high alert for any changes there. So I'd say that's what I'm focused on right now.